Hello, Theo traders. Here's the nightly report for Tuesday, April 19th. This is Doc Severson. I'm going to start out tonight's report on the Dow futures. So this is the YM contract, and actually over the last couple of days something fairly important has happened on the Dow. Now the Dow's getting a lot of attention lately because think about all the Dow stocks that are out there. They pay what? A dividend. And right now a dividend is the closest thing to any kind of guaranteed return that's out there these days. And so there's this global search for any kind of a guaranteed return or any kind of a fixed income. And guess what? Dividends are hot these days. So this is why all this global money has come barreling into U.S. markets, and especially the Dow 30, being attracted to these dividend paying stocks. So this is why we're seeing these boring old winding stocks that have just gone sideways for the past several years all of a sudden get up and boogie to the upside. So because of that, we're seeing something actually fairly technically important. We are seeing a couple of things here. First of all, the price, after seeing this higher low set up back in early February, has now become a higher high and has gotten above the highs from late, I guess this was early November when these highs were printed. Early November, beginning of December or so, right? So this major pivot, so if this will become more clear if I go out to something like a weekly chart. So let's go out to a weekly chart and just ignore the moving averages that are on there for a second. So now you can see that the price is above this important pivot, and this becomes even more important as we go out to the monthly chart, because now we can see that we had what was starting to be a lower low and a lower high and almost confirmed with that next lower low, but it didn't. It printed a higher low, and now we have a higher high. Actually, this is technically a monthly uptrend again. So this can be potentially a very powerful signal. I mean, we just do not see a change in polarity on the monthly chart very often. So on the Dow chart, again, the last times that we have seen this signal was during the rally here into 2007. In 2008, we printed a lower low and subsequently a lower high before confirming that with another lower low. So that got confirmed about halfway through 2008 with that lower low, lower high combination, right? So that led to some pretty nasty tape to the downside. And then to the upside, we did not really confirm the trend until we put in a higher high, higher low combination. That improved the probability that we were seeing a reversal. Wasn't confirmed until we actually took out that high. So that was the latter half of 2010 when that occurred. And so we don't see these signals very often, but when they do, they're fairly powerful. And so since that point, every low has been a higher low. Every low all the way up here on the monthly chart of the Dow has been a higher low, with the exception of when we went from a higher high to a lower low and then a lower high. So this almost started a downtrend, but it didn't confirm because the price stayed above this high or this low down here. Stayed above this low, so it never confirmed it, never really got down into the depths, did not sell off as much as other indices did, such as the Russell and the transports. So now that it got everybody bearish, a lot of that short interest got pushed out to the upside, and all this global money coming in, now we printed a higher high. So this is actually a very important reversal showing up here. Now the other thing I want to call your attention to here is on the daily chart of the Dow. Okay, so we've actually thrown a study on here. This is a dual moving average. So the pink line here is the old 200-day moving average. So these are just simple moving averages. And the faster one here, the blue, is the 50-day moving average. This is a very old school, very common pairing of moving averages on the daily chart. And a lot of times we'll use these as sort of filters to say when we see what's called the death cross, where the 50 crosses under the 200, we'll say, look out, we have potentially a change in trend, which could be more serious. This showed up at the end of 2007 and saved our bacon based on that filter, because we didn't have to endure a lot of the bear market, because many of my strategies were turned off at that point once the death cross hit. And then we look for the golden cross on the other side of this. After a correction, usually is a signal where we can go long. This is a very rare failure of that signal. Okay, I can't actually find any other readings like this where we had a death cross and very quickly a golden cross which failed. But there's always a first for everything, and this goes to show you that price action really is where it's at, because indicators can lie to you, and this one lied to us before we had another death cross as we got into January. So now look at what we have here on the right side of this chart. We do have another golden cross as of today. So what can we conclude from this signal? What I would encourage you to do is to put these two moving averages on your chart, go back and do some back testing and see what they mean to you, and see if this is a signal that you'd be comfortable with as a long-term buy signal. Now here's the S&P. This is the futures on the S&P, and we are coming right up to that 2100 level. So it got right up to there today, and I wouldn't say that's a massive rejection. There was a little bit of rejection intraday in the late morning, early afternoon, but that got reversed as always by the dip, right? So we are at a very important level, though. There's a lot of volume that was spent up in this area, and I believe it's going to be difficult for it just to get through this area on the first try. I don't think it's just going to slice through there without some overhead supply. So I'm going to be looking to sell some positions around in this area to see if it'll waffle around in here. So short term, I am neutral on the S&P. Short term, I'm neutral on the S&P. More intermediate term, I guess what I'm talking about here is within the next month, I'm a little bit more bearish on the S&P, and this is where, going back to my report from last week, where I felt that, again, with this move like this, in the manner in which it's made this move in the last 2 months, moves like this are typically unsustainable until they pull back a little bit, like this, until they pull back a little bit, even if it's just to make a higher low, to kind of pull back that rubber band and set up the next slingshot move if it indeed is going to go higher. So I'll look for that high to be taken out to confirm the bullishness there if that occurs. If it doesn't, then this potentially could set up as a lower high, and any number of things could happen at that point. So in the S&P, again, short term, neutral. More intermediate term, which is maybe out a month or so, I'm a little bit more bearish on this. If this higher low holds, then I'm going to be more bullish long term on the S&P, because what we've been through is essentially a huge sideways correction. Markets can correct through price or through time, and what we might find, especially with all the central bank policy interference going on out there, is that markets have no choice but to follow what the Fed is doing, regardless of whether that's our Fed or whether it's the Bank of Japan setting negative interest rates and just creating these artificial conditions. Remember, don't fight the tape. If the tape tells us that it's going in a certain way, then we have to find a way to ride along with that herd. Here's the Russell chart on the weekly, and so let's draw this trend line up here and see where things at. And you can see that this is right at, this is right at that trend line right now where it closed today for the week so far. So again, I think what would help for the Russell, if it wants to get up and get going here, I think it's going to be very difficult for the Russell just to blast over 1200 on the first try up here and go from a lower low straight up to a higher high. I think that's nearly impossible for it to do that, although anything could happen. But I think it's just going to be very difficult. I don't think the probabilities favor that. I think what instead would be an easier move for the Russell to do is if it did pull back, just like what I'm looking for the S&P to do, and then set up that higher low and make that the slingshot move. Markets sometimes work much better if they take one step back to be able to take 2 steps forward. Now, here's the Nasdaq, and the Nasdaq was actually our leader to the downside today. Now, this was a key reversal bar. We had a higher high today with a lower close. So that by itself does not mean anything. Usually what we need is confirmation from the next day's candle to see whether or not this is actually happening. But you can see where we've had these types of candles before in the past. It has led to a couple of days of weakness at the very least, or perhaps at least a pullback on something like this. So this is an important signal to at least flag this to say, hey, warning, a key reversal bar is not something we want to just completely discount. It could be the beginning of something, a little bit more weakness coming up here. I'll finish out today with the kind of the rock star for the day was silver. So this is the daily chart, and you can see how much of a move we had, just about a 4.35% move in silver. So this one's starting to get it on. If we go out to the weekly chart, let's see if we can see anything happening here. I would say there's a good shot that this is punched in a higher low here on the weekly chart. And so this is going to start that first monthly swing. This is going to kickstart that first monthly swing higher. Now, before I think that silver is completely out of the woods, I think what it needs to do is that it needs to print a fairly extensive first swing higher here, and then come down and print a very, what's going to be scary for a lot of people, but a very important higher low. So that usually sets the hook, raises the negativity, and allows the people that didn't get in the first time, this allows that smart money to jump in board, and usually it's institutions that are jumping on board at this point for that move. So that starts a change in polarity at the monthly chart, and then it's game on for silver again, and we know what silver can do if it wants to get up and get moving. So I think the key towards today's market analysis is not to overthink the market, not look at the market and say, well, it should be doing this, or it shouldn't, it hasn't earned the right to do this, or the economy's doing this and therefore the market can't do that. Don't overthink what's going on. Just stick with the price and just, turn yourself into a very, objective, rational computer and just evaluate it for what it is and not for what you think it should be. Thanks for listening, and I'll catch you tomorrow morning in the coaching session. Take care.